Hey folks, welcome to Money Me. I do appreciate you guys taking the time to come by and check out my channel. I greatly do appreciate it. We're going to do 5 stocks for 2023. I've done these videos usually in the beginning of the year before, and what I'm going to do this year, so I'm going to pick 5 stocks that are going to be, we'll talk about when the earnings come out, we'll talk about any news that comes out during the year, but I'm picking 5 stocks that even in a recession, which I think we're already in, and stocks that I feel will still do okay or do good for 2023. Now, with that being said, I am not a licensed expert pro. I've been trading stocks for over 20 years, and this channel is called Money Me because I talk about all things money. So we're gonna put out more content this year, hoping to grow the channel. I do appreciate your support. If you guys are new to the channel, could subscribe. I greatly appreciate it. So, on the desktop here, I reloaded Webull. I was having some problem. It's free, Webull desktop app, but I picked 5 stocks, and I'm hoping pretty much 5 different industries. Maybe 2 are related, but what I felt that would be pretty much safe investments. Now, do your own homework. Don't ever pick stocks that you see someone on the internet, because let me tell you, I've seen it on both sides. I've seen stocks that people say it's going to 600 and look at stocks that are 200. I want to give you my ration and my reasoning of picking these stocks. So we're going to get into it. And if you guys are interested in opening a Webull account, the description below, just click it. You get free shares. I get a free share. No pressure. It doesn't matter to me if you do or not, but it's out there in case you guys are interested. Hey, how can I open one, or how can I use this desktop? So the first stock we're going to pick, and is going to be tried and true, is Disney. Now, Disney has really, the 52-week range on Disney is 84.07 and to 160.32. So, we're going to use the closing price, and I'm going to roll this out in time enough for the first day of trading, which will be should be January. I think because of the first is I don't think the market's open January 1st. So let me double check. Is the market open January? Oh no, today's the 1st because it's Sunday. Is the market open January the 2nd, 2023? I don't think so. Is stock market on? I think it's gonna be yeah, the market is closed, I'm pretty sure. US stock market observance of you will occur on Sunday. Yep, it'll be closed. So when does the Wall Street open after New Year's? Just talking about we close money in observance of the New Year's holiday. So I just double checked that. I wanted to make sure. So that's good. I will put this video out then for tomorrow, for Monday, January the 2nd, and that gives you time to like, hey, the information's fresh. And 5 stocks for 2023. I don't want to make it real long and dragged out, but just give you a little brief. I took the time before I did this, and I'm going to do no fancy editing. I'm just going to upload this just like it is. But I took some, you'll know the 5 companies. I'll give a brief description. I'll talk about the 52-week, high and low. I'll kind of give an idea where I think the stock could go, but obviously these are for 2023. Does that mean, hey, I would still hold them in 2024? Well, we would revisit that. But every quarter, they come out with earnings. I'll make a video talking about, the company. So the first one, and I've talked about before, we are personally buying this one, is Walt Disney. So Disney at 86.88. Personally, I think, and I'm lumping this in the travel category. I think as gas prices drop and people are still kind of coming off of COVID and wanting to travel, that Disney I still think is a good stock, just because maybe I'm a little biased because I've been to Disney a lot, and I love Disney as a company and their product. But I think even with putting films out, that Disney definitely has the potential at 86, 88 to to be easily a $105, $110 stock. Now, with that being said, could the stock go there in 5 months and then go back down? Yeah, that happens. That happens a lot. If you look at the chart here, I mean, here you had the stock in October was 91 and shot all the way up to 110. I mean, that you make your own decisions. If you feel like you've bought the stock and have made enough profit and you want to get out, that's on you. I would not dump any. If I were to say for this, I say, well, you're going to put $1,000 into each position that I'm talking about. That's $5,000. I feel kind of safe with that. And if it's your only $5,000 and you're not paying your bills, don't do that. I mean, I'm really trying to give you guys really good advice and not pick stocks that have the volatility of such as Meta, which is Facebook, or your Teslas. I'm trying to find I picked 5 stocks that I feel pretty safe with that should be good for 2023. So Disney is the first choice, 86.88, 105, 110. And I'm gonna write a note down for that sort of I don't like to really put. Obviously, these are all, Jim Cramer always does buy, sell, or hold, but so these are buys, as so Disney, so 86, 88, I'm saying 105, 110, we could see, but I really think over the next 2 or 3 years it could even go higher. So that's the first stock. The second stock is actually Rent-A-Center. If you're not familiar with Rent-A-Center, Rent-A-Center operates a bunch of retail places that people that can go in and don't have traditional means of credit, and they basically can get a TV, get a couch, and buy items and pay. Where Rent-A-Center basically is making the money is selling the item and making charging the higher interest rate on people that can't get normal credit. They have a 52-week low of 1682 and a 52-week high of 5039. So the stock is down 53% actually for the year 2022. Disney was actually down. I'm not sure if I said that, was down about 43%. So RCII, I've been seeing a lot of activists and people getting involved, big money in buying the stock. Personally, we own this stock too. And I will disclose that if we own any of the stock. I say we, meaning people that I'm connected with or family members that's trading in retirement accounts and stuff like that. So that I would lump under the retail that I like the stock here. It's got a dividend yield of 6%, and I think at $22.55, this stock could touch $28 to $32 over the course of the year. So the next company, and I'm picking companies that I'm willing to even put my money in, is PayPal. PayPal is obviously I was looking for a company that was in banking, but when there's a recession and people start missing their payments on their house, missing their payment on their cars and stuff like that, that worries me. That worries me that people, with rising interest rates and actually they're making more with raising interest rates. But if people are buying less houses and less activity, and you're you're putting people in a pinch, what happens? But I like PayPal. PayPal's 52-week low is 66.39. So as you can see, the quote is 71.22. That's where it closed at the year. And we're pretty much, when we do this, we're going to honor the closing price. Yeah, it could open up 50 cents. I would address that. If it opened honestly more than 3%, I would say, okay, we have to change the price that we started with. So if we get a pre-market, obviously, if someone came in tomorrow and bought PayPal for $100, it'd be like, oh, Money Me looks like a genius at 71.22 or 100. That wouldn't be fair to the 5 picks. So the 52-week low, 66.39, and the 52-week high is 196.10. So PayPal is actually down 62%. That is huge. I mean, 71.44. What I like about it, PayPal, is they are obviously a global technology banking platform, but even with you used to be able to do friends and family, you can't do that no more. Or can you? I don't know exactly. I know that they was having issues to avoid like money laundering and stuff like that, or maybe you can but not sure. I have a business account with PayPal that I can't. You have to pay a different percentage. What I like about PayPal is that it's accepted more and more all over. And when you compare it to your Visas, your Mastercards, your American Express, the market cap is much less. The stock has taken a beating. There's 426 million active accounts on 200 markets. So they are in Venmo, Exum, Zettle, Hyperwallet, Honey. So they're in a lot, and people are using PayPal more and more. So I do like. I like PayPal. And personally, we own some of it too. 71.22. I'm going to give it a target of. And honestly, I'm looking for stocks that are going to be 15 to 30% return. These are traditionally, you can have those crazy stocks go up like a Tesla 40% one month and go back down 40% another. I sort of want the stability of some of these stocks that that you ain't going to get no real crazy. It's down 62%. Now, of course, every stock if the world enters World War III and everything, all hell breaks loose, sure, stocks could even go down even further. So at 71.22, though, I feel pretty confident and comfortable recommending this stock. At 71.22, I mean, look at it, PayPal here. Let's go at 196. Honestly, I think we could see $90. I think that's pretty conservative. Now it could hit 90 and bounce back to 85. It could hit 110 and bounce back to 90. But I feel as far as a target price, 90 is comfortable, based on what looking at charts and seeing what I'm seeing. And just the appetite for stocks that have gotten beaten up. Now, the next two names are sort of similar in their category, but we do not have a position in these stocks, but would consider in the future if we took out money out of something else and would take positions in these stocks. So Vulcan Materials, and I'll explain to you why I like it, and again. Why it's a pick for 2023. So Vulcan Materials, VMC, the 52-week range is 137.54, and the high is 213.65. So here at 175.11, so it's the highest dollar amount stock in the 5 picks. It was only down 15.64%, but basically Vulcan Material is a supplier of cement, construction, and asphalt and stuff like that. So from what I'm reading here, and I have a separate screen here on the left, so I'm recording on the right on the Weeble. The company sells mix in Alabama, Arizona, California, New Mexico, Tennessee, Texas, and has construction in Alabama, Tennessee, Texas. And the concrete is in California, Maryland, New Jersey, New York, Pennsylvania, Oklahoma, Texas, and Virginia. And they have a calcium place in Florida. So no matter what, even with the economy in a recession and with government contracts on infrastructure, look, irregardless of where you stand on politics, they're going to try to do whatever they can to make 2024 look strong. It doesn't look good for any sitting president, any party that's in there to make the economy look weak. So they'll want to get gas prices down, which could be actually bad for oil stocks, and they want to get there's budgets. A lot of this stuff is planned out a year or two ahead. So there's infrastructure bills that are like 10 years, and there's a lot of contracts that are out there. And when they're building roads and bridges and doing these things, this stuff doesn't happen overnight. I know in my area here in Pennsylvania, and I live near Scranton, Pennsylvania, actually, not about 25 minutes east of it, not far from the New York border, actually. But they're rebuilding a bridge here in where I live, and they've been working on it the past year and a half, and it probably still has another year and a half, 2 years. So complex bridges like that can be 3-4 years in the just for that. So there's a lot of infrastructure. There's a lot of older infrastructure stuff is breaking down that I feel comfortable with Vulcan Materials as being a pick. Now, it's a conservative pick. I don't think you're at 175. We definitely could see it go back to that upper range of 213.65. But the appetite for stocks is not the same as it was even last year, and with the word recession. So I don't feel comfortable saying 213.65. At 175.11, I'm going to actually put a price on it of about 190, which is conservatively is only probably about a 7 or 8% return. But I think it's a stock, honestly, that you can even hold past 2023. So I like the company though, and I think it's a good conservative stock that as you see on the chart here, and you go back looking at it, has a lot of ups and downs as far as I think there's different times. So this is one of those stocks that if you dollar cost average, in other words, you got in $1,000 and it drops to there, you can see there the broad it seems to have a lot of support chart wise in the 175, but there are dips down to 140, 150. So those dips sometimes are opportunities to add to it. So the 5 stocks I'd pick, obviously, if you put 1,000 in each, that's where you would get a true portfolio return. But if you have more to add over the year and you want to basically say create a $10,000 portfolio in these 5 stocks, what you could do is you could take the remaining 5,000, and when you get dips in some of these stocks like that, add to them. Add to maybe you make a company like Vulcan a little bit more of a bigger position instead of dividing everything up equally. I'm not against that. I think I'm dollar cost averaging in Disney the whole next year for sure. And when the stock is down here at this range, I'm buying more. When it's going to be closer to 100, I'll be buying less, obviously because the price is higher. But also, I'm just making a saying that, hey, I think it's closer to the price I think it's supposed to be at, but I'm willing to buy it even if it drops more. Disney, for example, is something at an 8-year low. So, all right, so that is in the cement business. And, the next and last 5th stock is American Water. Again, that's a conservative stock, American Water. And I'm familiar with that company too. Don't own it, full disclosure, but they are based in Jersey and Pennsylvania here, and they were down actually. That surprises me too. They were down almost 20%. American Water at 152.42. Again, this is another infrastructure play. I like it doesn't got a real expensive PE. It's not all glitz and glamour like your Googles, but again, it has a lot of long-term contracts with the government, with the military, and I really think at 122.77, 52-week low, 189.65. This also falls into that same as Vulcan, as a cement company, with one of these same story that people are still going to pay their water bill. We need to invest into getting good quality water and the infrastructure and doing these things. And as they're building highways and replacing water lines and doing things, they're still going to be even. Look, people are going to pay their rent. They're going to pay. We need water infrastructure. So I like this. I like it's a conservative one. It's not. The dividend yield is 2.6. The dividend is 1.7%. It's $2.62. And I honestly, at 152.42, yeah, this is probably about a 170. Yeah, I'm going to say 170. $170. Again, only probably about an 8% return. But this is a stock that you could probably, again, hold beyond 2023. So there you go. There's my 5. I had to pick 5, and I wanted to pick 5 that I felt were safe, some conservative, and definitely should do good for 2023. Hey, I do appreciate your support. If you like these types of videos, you guys could give me thumbs up and support me. My name is Pat Dees. I have another channel that I do where I do reselling and stuff, and I have experience in being a landlord, being a restaurant owner, an online internet company, and trading and talking about all things money. And that's why I like doing these videos, really sharing my experience. I couldn't do this video if I was 25 because honestly, I don't think I would have the, now that I've done this now for 25 years, I have the experience and could talk about these things. But always do your own due diligence investing. Don't say, well, the guy on Money Me said this is going to be, never, there's a lot. I'm learning. I'm constantly learning. I mean, I love Dave Ramsey. Dave Ramsey used to be in real estate. And when he was younger, he went bankrupt and he learned from it. And that's what I hope that you guys get out of this and share your experience. And comment below. Tell me what you think of the stocks. If you think they're garbage, tell me. Tell me, are you invested into any of these stocks? But doesn't cost you money. Click the bell button. We don't have no Patreon. We're not charging here. We're getting views and we're growing, but it's a slow pace. And I promise you for 2023, we're going to make more content and more, I think, good quality discussions like this. And I'm hoping one day maybe to bring guests on and do some different things and talk about money. And I appreciate it. So we'll see you again.